Okay, so today's financial topic is about paying down your mortgage. The objective, let's say a 30-year mortgage, you want to pay down that mortgage. You make your principal and interest payment, and next month you would make an extra payment to pay down that mortgage. Let's say you pay an extra $500, okay? So the idea here is I've been doing that for the last 5 years. I've been adding an extra $500 to my mortgage payment each and every month, and I want to pay off my mortgage early. So that's a great strategy for a lot of people, and it works extremely well, except in situations such as this. Then you've been doing it, COVID-19 hits, maybe you're out of work, maybe your spouse is out of work, maybe both of you are out of work at the same time. The challenge with that strategy is this: if you need cash, you can't just go to the banker and say, hey, Mr. Banker, Mrs. Banker, I've been paying you an extra $500 a month into my mortgage, so I need to get some of that cash. Can you give me, 5 or 10 grand or 15 grand? And the answer is obviously going to be no. So there's a better way to do that. The Federal Reserve came out with a study or a recommendation in 2006. And what that study was their recommendation was to, rather than make that extra mortgage payment into your mortgage, take that same $500, put it into what's called a cash value life insurance policy. What's a cash value life insurance policy? Well, it's a life insurance policy that over time it also pays you interest or dividends, either or. And so by doing that, over the course of time, you're going to be able to accumulate money or equity in that policy. So let's say for that same 5-year time frame, rather than putting that $30,000 extra into your mortgage, what if you were to do it into a cash value life insurance policy? The goal here is to pay down the mortgage and save a whole bunch of money on interest, right? Well, as you do that, as you pay down your mortgage, if the money inside of your cash value life plan goes up, you're going to have that equity that builds up. At some point, those two are going to meet. And what's going to happen? You're going to be able to take the money out of your cash value life insurance and then pay off that mortgage. That gives you the opportunity to tap into cash when you need it. So it's liquid. So if coronavirus hits, you're out of work, whatever, rather than going to the bank, number one, you're going to have to in order to get the money out, you're going to have to refinance or get a home equity line. Well, how are you going to do that, or how are you going to qualify for that if you don't have a job and you don't have an income? So the idea here is, like I said, at some point the balance will come down as you pay down your mortgage, and the equity will go up in your policy. So at some point you'll be able to take that and then pay off your mortgage early, saving you all the money that you wanted. So it's just simply moving money from one pocket to another pocket, and then that way you're going to be able to achieve what you want to achieve. I appreciate you watching. I would invite you to go to my website, tymarwealthgroup.com, T-Y-M-A-R, wealthgroup.com. There you're going to find a lot of good financial information and strategies. And if you like this, please like this button and share it with a friend. Thanks.